Yay! We are live. Awesome, everyone. We will give everyone a chance to join us. We are going live in several places today. Hi, YouTube. Hi, Facebook. Hi, LinkedIn. We're so excited for joining us. Today, we are here with Matt Dillingham. Hey, Matt.
Hey Michelle, hey girl, how you doing? We're gonna talk about the most
Oh
exciting
my
topic
gosh.
ever, said
Oh
no
my
one
gosh.
ever. Credit, but it's all important. Thanks for having me
Oh
back
my
on. It's been a
gosh.
while.
Yes, thank you for joining us, guys. Let me give you the disclaimer. Matt is a dear friend of mine. He is an acquired taste.
Wait, back up. Acquired taste. You have to clarify that.
So Matt has a very awesome and outgoing personality. Is that a good way to say it?
I'll give you that one. We're gonna have a
Okay, did I clean
conversation
that up
after
a
this is
little bit?
over. Never been told that before. Okay, it's an acquired taste.
So just roll with us. The good thing about Matt is he's going to tell you like it is. He is a former Marine. He is a Marine, right? You guys aren't never former Marines,
No,
right?
I went
He
through too
served
much stuff to earn that title. Oh my
all
gosh.
right. So he served in the U.S. United States Marine Corps. So if anyone knows a Marine, I grew up. My grandfather, who I adore, is a retired Marine, and they just tell it like it is, right? They don't hold back. They love their country, they love their family, and they love their communities, and they tell it like it is. So did I clean that up, Matt? That's the acquired taste I'm talking about.
I approve.
All
I approve. You can live tonight. Like I'll say it
right.
like that. Okay.
I made it. Hey guys, and if you're joining us and you're watching in any of the places, whether it's YouTube, Facebook, LinkedIn, we are streaming via StreamYard. So definitely click like the little secure link or whatever so we can show your comments. So hi Facebook user. Please drop in the comments. Everyone, tell us where you're watching from. Today we are talking credit matters because Matt is here to talk to us about all things credit.
Yep.
Before we get started, you guys know how we roll around here. It is all about building a legacy and generational wealth. So we always ask our special guests, um, why is building a legacy important? And especially from a credit perspective.
Well, it's important because if you look at, and this is, I don't mean to get too into like conspiracy theories, but if you really
Uh
look at, no, because we can go in real easily without trying to. If you look at the richest families in the world, right? They didn't get there like yesterday or one guy. It's because somewhere along the line, someone said, let's build wealth
yeah.
and set my children up, teach them, teach their children, and have a strong, healthy family unit, which is something that's not really talked about anymore in society. That's what family
Yeah.
studies, and like a healthy society starts with the family, like it does, right? And if that's been broken up, it affects everything else. So basically, what they did was they talked about, hey, love each other, protect the family, grow the wealth. You got kids, do the same thing, and set yourself up for generational wealth and legacy. Because this way, your children will look back and can look at you and say, "Thank you," but how to protect it and just keep it going. Because that's really how it's supposed to be. You're supposed to go from, you get yourself, what's the word? Get yourself settled first, then you can
Yeah.
help the children set them up because it's really not supposed to. We're not supposed to have generational cycles of poverty and
Yeah.
abuse and all that stuff.
Mm,
And it's supposed to be like, hey,
generational curses.
yeah, curses. You can trauma, all that things. That's like the norm, unfortunately.
Yeah.
And you teach them that financial, hey, do with your money and credits where credit's important. If this is
Yeah.
not in place, it makes everything that much harder to do. And if your credit's smooth or in good standing, then it helps making wealthier. Because at the end of the day, your credit is a tool to be leveraged to buy other
Boom.
assets to then create more generation wealth, which you then teach to your children, keep in the family, and keep it going. That's my answer. I
Boom.
know you liked it. You're welcome.
Yeah, guys. So it's kind of like the whole airplane scenario, right? If an airplane is going down, they tell you you have to put your mask on first
Right.
before you save those around you. So
Yeah.
I love it, man. I love it, guys. And we're here today talking about how to leverage credit to build generational wealth, right? And it's so funny. So I did a spotlight. I was on someone's panel last night. It was amazing. And they asked the question. They were like, "Well, how do I invest in real estate if I have bad credit?" Matt, you would have loved my answer. Guess what it was?
What was it?
Fix your credit.
There you go. That's a good answer.
You know,
You
there
fix
are
it,
ways, guys, to make money, and you do not need perfect credit. But it doesn't matter what your credit looks like now, you will be more powerful, whether it takes a year or 2 or 3. You will be able to move and leverage much differently once you get that credit in order.
You
Agreed?
know what? The piggyback on that, not to interrupt you, but finish your thought first. I want to add
It's
something to
done.
it.
It's done. I was past
Okay.
the mic.
So to make this, you mentioned the point about, credit takes time to build. It takes time to destroy. And one thing people talk about is one component of your credit score is 15% is length of credit history. That's like the main reason, along with another one, why it takes a long time to build up, because you have to. That your age is a factor in that, and it reminds me of like people like, I don't want to take 3 years, but trust me, that time period to do it, you'll be much better off. And it's kind of like this. It's like if you are, like severely overweight. In this example, show we haven't watched, but we watched on YouTube. We watched it for us. Michelle McDaniel. It's funny. Have you ever? It's on TLC. Have you heard of the show 1,000-Pound Sisters?
I have.
Okay. So one of them is at a point where they're so morbidly obese, they need assistance to like walk. They can't reach over the sink to wash dishes and things. Like they're severely limited. They're on an oxygen tank, all this stuff. And her sister had some weight loss surgery, but her sister's on a journey to get better health. She got a daughter and making it work. And you see the progress and journey. You're like, wow, okay. Now they're both not at a place where they're like at a much healthier weight, right? But in the process, you're seeing while one person makes a change, they're happy and they're making it work. While the other person is severely limited. Okay, I make the analogy of credit because you may be severely limited now with your credit, but as you make the progress, more things will open up to you. You're going to get better things. You can refile this stuff, and if a year from now you're not at where you want to be, but you're way, 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 way farther along the process than someone like in this case Tammy needs to start the process compared to someone else who hasn't. And the difference is the thing that makes challenging with credit is that no one's going to see your progress, and no one's going to share it because it's a very personal thing, right? So as you're working credit, it's not going to be seen until you decide, for business purposes, you're like, you know what, it's time to upgrade my ride, and then maybe go, oh, you're successful now. In that sense, they'll see it. Other than that, you're kind of on your own and just making it work. But once you get to that point, you can brag about your credit score. Then people are like, wow. And then you tell them how long it take. Oh, it took me a couple of years. I'm like, oh my God, but you got to start now. Because again, my point is like, just start it. Because as you do, you'll get happy. You'll feel better. Just like her Tammy's sister saying, she still needs to lose weight, but she's like, I feel better. I can move around more, I have more energy. And that's the point you want to get to. Like when stuff starts coming to you, you're going to go, I remember this in my own journey because to get my credit up, when I started getting offers in the mail for credit cards, I was like, oh, it felt so good. Wasn't there yet, but it felt good to be like, wow, I'm wanted. I can tell them no, just like the other women come out. Just kidding. But it's like
gosh. I told you guys. Matt, I send a lot of my clients to you, right? And so one of the things that I want to do today, so this is a quick interruption, guys. We always do these interruptions for a quick nugget, right?
Yep.
So I have a client. She wants to buy a house and, she's concerned about her credit. What does she do? She
got to do the hardest thing that a lot of people who are concerned about credit don't want to do. They have to go get it from all 3 bureaus and actually look at it to know where they're at. Or she can come to me and I can do an analysis and let her know where she's at and advise on the things that like she needs to do and what we'll do for her on her behalf. But the hardest part, my point is, you have to know where you stand and get past that fear. Otherwise, and I've done this, you will let that monster follow you everywhere you go, and you won't unless you face it. You're just screwing yourself in anything you do. But it's just simply starting with where you're at, not using Credit Karma, Go to annualcreditreport.com at the very least, get all three. Don't pay for the scores. Look at the information that's on there and see what's going on. And you'll find that you may have stuff on there that's completely wrong, erroneous, fraudulent. Not only that, but you notice that like everything on there is not uniform. You know?
So what I heard was the first step is you need to grab all those credit reports, right? You need to know what's on your credit. So whether it is annualreports.com or I always recommend my FICO, especially if you're ready to make some changes, right?
Yep.
It does cost a little bit of money, but it's pretty accurate. So guys, the first step is to grab the credit report, rip off the Band-Aid and know what's happening on there, right? That's the only way to combat it.
Yep.
Boom. And then the second step I heard was make sure start with your personal information. Make sure that personal information is accurate. That means your name, your addresses, your telephone numbers, your jobs,
social,
all of that.
All that stuff. Yep. Because you'll be surprised.
Why does that matter?
Because in that section, there's a whole bunch of reasons why I won't go into all of them. But one, I'll say this. If you're having to repair your credit and dispute negative items on your file, anything in the personal information section that's old, outdated, and erroneous are attached to negative items on your account. So what happens is when you call into the bureaus and get this stuff removed and dispute something, the bureaus get lazy. They'll try and be like, all right, what address name is this account attached to? And if that information is completely like wrong, they'll come back and say, oh, it's verified, it's you. But by removing it, they can't verify it. It makes the process a little bit easier to get stuff deleted, okay? The other thing, too, is that I've had clients where they'll have addresses on their file that they've never lived at. They may have names or like, that's not my name. For me, I had experience. I had like 9 variations of my name. One of them was grossly misspelled. I had never spelled like that. But the problem is people realize that your credit report's got 4 tiers, and when people pull your credit report, not the accounts, the report, they're seeing your personal information, your hard inquiries, your accounts, your public information. They're seeing all that. And the first thing that comes up is your personal information. If you got a whole bunch of names and addresses, it makes you look very shady. And you're trying to say, hey, I want to hold Greg. Can you trust me? And they're like, so you say your name is Michelle, but you got Michelle here, and you got, Aquanetta here, and this address, and doesn't make you look good, right? And the thing is, it's funny, but the thing is, when they pull it, the underwriter is not going to ask you what happened. They're not going to be like, who is this? They're going to be like, nope, bye. And you go, yeah, it makes no sense. That's a couple reasons. And then some cases for married women, if you have your maiden name on there, someone can get that and apply for stuff in your name. Even though it's not you legally, that can happen to you as well. So you want to get this stuff succinct and have it be just concise. Because at the end of the day, it's about looking good on paper. Because you're not going to go to a judge and say, hey, here's what happened over the last couple of years. It's, well, you look disgusting. Goodbye. And, oh, you look good. We can move forward. Right.
Awesome, guys. So make sure your personal information is great. Okay, so what are some other questions? Matt, I have student loans. I have a lot of student loan debt. I've heard that is not going to allow me to buy a house. How do people overcome that?
So I know that and you know more about this than I would. Didn't they like modify how much they could take on some student loan debt and put it into the home loan? Some, they did. Some, not all of it. Some, right? You know more about that. For that, I would say talk to your realtor on that. They know the programs. But as of right now, the student loan repayments are paused or frozen. However, now I'm starting to see articles on like the people in Congress saying we need to cancel it or freeze them again. And I don't know if they will. They'll probably make people wait, and it's a control thing. So the repayments are going to start February 1st, 2022. We'll see what happens at that point. If you have student loans right now, you got two different options. Call them and see what arrangements you can make to start paying something back. It's better than nothing. Do not hold your breath on student loan forgiveness, because according to that, you should have to make like 10 years of payments to then qualify, and then that's 10 years in a row, and they may be like, no, sorry, we're going to change it again. All right. Yeah. Now you will see some people get it, but don't hold your breath again. It's going to be like it'll be out there with like winning the lottery. Just don't count on it. Okay.
Yeah.
The other option they can do is that we are affiliated with a company called studentloansurvivors.com, and all you got to do is set up a free call, free consultation, speak to them, see what they can do, and they can help you getting your student loans under control. So either talk with them, talk with your student loan service provider, and get something going now, because once these things come due, they're not going to take any more pity on your credit. They'll start marking you late, and that'll hurt you on anything else you're trying to get done. Especially if you're trying to buy a house, because they'll look at that and go, well, he had all this time to get us in control. He didn't do anything. You can't pay them back, but you want to borrow money from us to buy a home. We can't really trust you.
Yeah. So Matt, let's talk about student loans. You brought up something. Let's talk about late payments.
Oh yes, late payments.
Yes. So I know late payments can really be detrimental to someone's credit.
Yeah.
Right. I know, like, can you just tell us a little bit about like how different things are rated on your credit and how late payments really affect someone's credit score?
Okay. So I'll start here. So your credit score's got 5 different components to it. 35% is payment history, 30% is credit utilization, 15%, as I said before, is length of credit history. The older your credit in your accounts, the better that looks. Next chunk is 10% is a mix of accounts. So you have maybe some installment loans like student loan, a car loan. You can get your rent. You can get your rent report on your credit report. Utilities, obviously credit cards, revolving credit, and the final chunk is 10% is based on new accounts, meaning you don't have a whole bunch of hard inquiries. So keep this a minimum, because I've seen people with a lot and they don't realize it, and that can also make you look desperate in addition to your personal information. So the biggest chunk of your score is payment history. One late payment, whether on a student loan, a mortgage, whatever it is, one late payment can drop you anywhere between, depending on where your credit score is, can drop you anywhere between 50 to over 100 points. Okay. On top of that, that late payment will then stay in your file for 7 years unless you dispute it. Number 3, even if you make the payment on time the following month, you do not get all your points back. You get them back gradually. Okay. So at the end of the day, if you're trying to make the minimum payment on a student loan or a credit card, it's better to make that payment at the minimum versus having a late payment, because that late payment will drop you. They'll drop you like your trash, basically.
Guys, late payments. So whatever it is, try to make payments, whether it's student loans, credit cards, car notes, make these payments on time. Anything that shows up on your credit report. Jamila says, this is a quote from Matt. One late payment can drop you anywhere from 50 to 100 points on your credit report.
Oh, yeah.
And they're really hard to recover from.
Yeah, just trying to recover from it is amazing. Because the thing about late payments too is if it's fresh and you're trying to like dispute it, it can be done a lot easier if it's from financial difficulty, right? Oh, you're welcome, Facebook user. And yeah, those wrong names are hurting them. They don't realize it. But if it's like an old late payment from like, I don't know, for example, 4 years ago, especially if the account's closed, you could be like, hey, I want verification on it, because trust me, these creditors are not keeping everything in check like they're supposed to. And they'll be like, we're lazy, screw it, we'll just turn it over. Serious. It's just how it is. But if it's fresh, you got to be like, all right, I'm really sorry. I was going through a rough time. Just be nice about it. Write letters, speak to whoever, be cool about it. Being nice will take you far in life. Unlike some people. I understand that. But if you do that, they'll be like, all right, cool. They can work with you and all that stuff. It'll increase your chances of it being turned around. If not, give it some time, go at it again, and all that stuff. So, but just pay stuff on time. If anything else,
guys, first thing. So let's talk about statement dates. We're talking about paying things on time. Yeah. How do credit card statement dates matter? Why do they matter when it comes to credit?
So a lot of people think, all right, I paid my credit card on time, whether they made the minimum payment or they paid off on the due date, right? Well, the statement date's very important, and a lot of people don't realize this, because you get that like a new statement's been created. Like, what does that mean? The statement date matters because whatever balance you have on that account on that date, that's the balance that gets reported to the bureau. So you're like, okay, what's the big deal? Well, the whole 30% utilization is 30% of your score. So if you're over 30% of your credit limit on any card, and that balance gets reported, you'll get dinged for it. So the trick is to move your due date. Make sure it works for you financially too as well. Move the due date to like just before the statement date. Then call. I'm sorry. Let me back up. Find out the statement dates for all of your credit cards. That's number one. Number two, change the due date to like just before the statement date. Right now, you know the statement date. You have a couple different options. If you're above 30% of your credit limit, you can one pay it below 30%. The lower the better. You can pay down to 2%. That's ideal. Or if you're able to, you can pay it off. Now, it doesn't hurt you to have a small balance being reported to the bureaus. It's okay. All right. It's fine. So long as you're like, under 10%, that helps you getting helps you favorably, because the lower that your utilization is, the better. All right. So so don't worry about that. The other thing you can do, for those of you who are watching this live on the replay, if you got a high limit credit card, you're like, man, I just want to spend it and go crazy with it, right? Here's what you can do with information. Number one, you make sure you get the means to do this. If you don't, you start saving the money. You save the money, you stack it up, right? Then once you have the money to pay off the balance, okay, you then go on your trip or shopping spree, right? You have fun with that credit card. Then for the statement date, you take the money you saved up, pay off that balance in full, or just paid below to 2% limit. You're set.
So say that for one more time, Matt.
So for the spending spree thing,
yes.
Okay. So if you have a high limit credit card that you want to just have a good time with and go have a night on the town, you want to make sure you have the money to do this. So if for example you got like a $6,000 credit limit on a card, right, and you want to go crazy with it, unless you have the money right away, put aside the money first. Think about how much you're going to spend, right? Know the statement date. Then once you have the money saved up to pay off the balance of where you're going to spend, go out, have a good time, run the credit card up, and then before the statement date hits, pay off that balance with the money that you saved up, or pay down to like 2% limit. Therefore, when the statement date comes, what will be reported is either zero balance, you pay it up, or like 2% of the credit limit. Okay, in that case, right? So it looks like, oh, you're still being responsible, which you are. Instead of always carrying a high limit, because I've seen people where, it's another thing I want to get into, is that I've seen people where they'll have multiple credit cards and no late payments, like none, but they're all at like 35, 40, 60% utilization, and their scores are like 100 points lower than where they could be, like 500s. So in a weird way, even though the payment issues on time, which is good, that utilization can override that and seriously take your credit scores. So keep that in mind.
Awesome.
Keep them low as much as you can.
Awesome, guys. So summary of what Matt said, right? So he's talking about utilization of your credit cards. That is the biggest hack. Honestly, and it seems so simple, right? But it even I would call Matt myself and be like, oh my gosh, Matt, my score just dropped 29 points. Because, and I know this because he's taught me, right? Like I ran up a card, I think it was like whatever the balance was, right? I ran it up right before the payment date because I had to pay for something big, and I paid it off, but I paid it off like the statement date was on like the 26th, and I paid it off on the 27th. And I'm like, all right, I'm good. No, I was dinged like 29 points by the bureaus because I did not pay it by that statement date. And that is like concrete. All three of the bureaus are going to look at that. So I'm going to summarize really quick some of the things Matt talked to us about today, just a few of them. One, first step, rip off the Band-Aid, look at your credit reports, right? Either annualcreditreports.com, whatever site. My FICO is another good one. Find out what your credit scores are and know what's on the reports. Know your personal information that's on there. Know what accounts are reporting. Know what late payments are reporting. Know if there's any judgments or collections accounts. Know what's on your credit report. That's step number two. Step number one. Step number two, dispute any information that is inaccurate. It's starting with your personal information. Names, socials, addresses, employers, telephone numbers, all of that stuff. get rid of anything that is inaccurate. And really, Matt, you've told me before too, you kind of want to remove everything but one, right? You want to give like just one piece of information in every category. Is that accurate?
Yeah, just your name listed on there as your name is listed on your social security card, one birthday, one social, one current address, nothing previous, and then whatever employer you want to put on there, self-employed. You can leave it blank, but just everything to be succinct. You know what I mean? Look clean, because then you look good. And it's like, all right, cool. You're one person. I see what you're doing. Cool. Versus you got a whole bunch of stuff looking like a bunch of drama. Like, oh, we're gonna give you what? No, we're not.
Yes. And remember, guys, like, again, I tell people, like, your credit is like going to the doctor, right? So just because your credit's beautiful today, these are ways to kind of keep it beautiful, to keep your body healthy, right? So, one, get your reports, know what's on there. Two, clean them up, make sure the information is accurate and clean, your personal information across all three reports. I'm just going to go to number three. Number three, utilization. Any credit cards that you do have, of course, keep them below. Most credit people will say 30%. I like to say 10%, at least by the statement date, right?
Yep.
So if your statement date and not the due date of your credit, not the due date of the credit card payment, but actually the date that the bank stamps the account, right? The date on your statement is the same every month. Matt gave another hack, which was call your bank or whoever has your credit card and say, hey, can you make my payment date closer to the statement date? So that way in your mind, like I have one credit card that we did that. The statement date's the 26th. We have the payment due on the 23rd. So that way we pay it off or close to it by the 3rd of every month, and we don't have to worry about it.
Yep. It all helps. Can
Awesome.
I share my screen?
Please,
I got some questions to share with people, and you're gonna be like, "Oh my god, they're good ones too. They're designed to make you think."
Just go ahead and pull it up. Can you pull it up?
Yep. All right. Can you see everything?
We can.
All right. Can you see my screen now?
We sure can.
All right, cool.
Can you
guys
see the screen? Let us know in the chat if you can see the screen.
Yeah. So here's a question. I added this. And Michelle, you can answer this question too. When do you stop building credit? A, after age 65. B, submit a special form to the bureaus after age 72 that exempts you from needing credit as you retired. Hopefully, I say that because retirement's like a gamble nowadays for people. Or is it C, never?
I'm not going to say, I know there's going to be a delay. Melissa, so we can see it. Guys, what's the answer? Pop quiz number 4.
Yeah, when you stop building credit, A, after age 65. B, you guys submit a form to the bureaus at the age 72. It says, hey, I'm exempt, I'm retired, if you can retire. Or C, never.
I'm going to say never. I'm always wrong when he does these.
I'm gonna let you like marinate on that just to make you feel nervous and anxious for no reason, because I like to put pain on people. I'm kidding. All right. So 5, 4, 3, 2, 1. The answer is never. A lot of people don't know this. You never stop building credit because your credit's always a factor in life, unfortunately. There was one guy we were talking to bring as a client. We never did. He's a veteran. I think he was like, he had a caretaker. He's in late 60s, 70s, probably in 70s at this point. He went for a VA loan and got declined because his credit was not that great. So even though he served his country in his late 60s, 70s, they don't care. Your credit, they're like, nope, sorry, don't matter. All right. Last question. Should you cosign? There's no ABCD. This is an open-ended question. Should you cosign?
No. We're gonna wait for some other people. Matt, while we're waiting for some other people, we have a question that popped up. How many credit lines do you recommend to have?
There is no magic number. You can have. I'm gonna say this. If this is talking about credit cards, there's no magic number. You can have you can have 30, and you'll be rewarded. The more revolving credit you have, the better. What I tell you is this: it comes down to how many can you manage successfully. Sure. If it comes down to 3, then you let it be a 3. Because end of the day, it's your credit. I can't take care of it. Michelle can't. Your mama, God can't. Whatever. It's on you. So if you do 3 for right now, do 3 and then build it up to like 4 and then 5 and keep it easy, keep it chill. But I can tell you this: the more revolving credit that you can manage, the better you can show it, the better it looks, the higher your credit score will go. Because at the end of the day, I asked this question to a client of mine. Michelle, you can relate to this. If it comes to getting a house, right? If the only factor they're considering based on your credit was credit utilization, if you have someone who's got $5,000 in revolving credit and they're using 3%, you're like, oh, that's not so bad. But and both person A and B are going for a loan of like $300,000, right? Hypothetically. Person B or person A's got like $5,000 in revolving credit. They're using 3%. Person B's got $90,000 revolving credit and also using 3%. If you're the underwriter, you're going to give 300K to one person. Who are you going to trust? The person can manage the higher amount of credit or the lower amount?
Yeah, the higher amount.
Higher amount. So it makes you look better. So keep that in mind. If you're going to have more credit card, do it strategically. Manage the ones you got right now. You can ask to have every 6 months. I would ask your credit card company for a credit limit increase. Okay. Before you do that, though, you gotta look at your own credit first. Look at the payment history you have with that company, and take those into consideration. Because if you've been missing payments, and if you've been running up a balance all the time, they're not going to be so quick to like sure or say yes to it. And if you do ask for them, and let's say your credit's in good standing, you have no late payments, and your balance has been low, when you call them, one, be nice. Number 2, be nice. Say, hey, I like you guys. I appreciate your program. Thank you for having me. And then number 2, say, hey, I'd like to get a credit limit increase because I'm trying to renovate my kitchen. Something that is sensible, smart, because you're taking that money to invest in your house that can build your equity. And then,
that makes sense.
Yeah, so you want something smart like that, not to just go on a trip. No, it's like, hey, we're trying to renovate something, or you could say just for business, something like that, right? They'll do that. Then if they say sure, then you got to ask them before we go do this, do you have to check my credit again, or can you do it in-house? The difference is they get your credit again, they have to pull your credit, create another hard inquiry, and you get declined, you're kind of stuck with that for 2 years. If they can do in-house, meaning they can just bring up your account and say, oh yeah, you're good, boom, and that doesn't pull your credit and you're safe. So you want to find that out. Now, if they do a hard credit check and your credit's still good, that's when you need to make that decision if you don't mind it. But these are things you want to ask them. Say, hey, can I get a credit limit increase? I'm trying to do X, Y, Z in my house. And then you run into your kitchen, you let Michelle know. Michelle goes like, oh my God. And you tell Michelle, we're going to sell it. And she's like, oh, this is great. And the house value goes up. Michelle's happy, you're happy. And then, that's how it works.
Yes, guys. So the short answer to what Matt says, as far as how many credit lines should you have, it's however many you can responsibly manage.
Yep.
Right. And so I want to talk a little bit about buying a house, right? We're always talking about buying real estate or buying real estate. So a couple quick things that I want to tell you just kind of popped in my mind when Matt was talking. So even when it comes to these credit cards, right, it's very important to keep the limits low, because there's a term called DTI, right? Debt to income ratio.
Oh yeah.
So when it's time for us to purchase a home, your debt to income ratio is one of the key factors in one, getting approved, and 2, how much house or real estate we can actually buy. So how do we keep that debt to income ratio low? Well, a credit report that a mortgage company looks at to determine that, they're going to look at any debts that we have that are on the credit report. Usually that includes credit cards, student loans, auto payments, those type of things, right? Any installment loans. And generally the one that's the easiest to move are credit cards, or pay off a car, but that's usually not that easy, right? Why do I say that? Because if I have a $10,000 card and it's an $8,000 balance, I probably have a pretty high monthly payment, right? That $400 monthly payment goes against that debt to income ratio. $400 a month it makes a difference of about $100,000 to $200,000 in buying a house, right? Now, if I pay that card down to closer to that 10%, well, now I can buy a lot more house, my DTI goes further down.
Gotcha. Good things to know.
Never
I don't
have.
think people don't realize like just how these small things make a huge difference.
Huge.
Yep.
Huge. Awesome. Okay, so Matt, I know you have a Christmas special going on for our audience. Tell me, what does that look like?
I gave Santa Claus the rest of the year off. So we're doing a half off special with our credit repair. Normally, it's a flat fee we charge. It's $750 per individual, but through the rest of the month of the year, it is now half off at a one-time payment of just $375, and you get lifetime credit repair. And you also get a review of your credit report with a law firm that we just partnered with. They look for violations on your credit report, and if there are, they can work with you on contingency to sue the bureaus, debt collectors, and creditors, get the items deleted, and get money that's owed to you because of said violations, right?
What's a violation? What do you mean? Tell me.
So one of the things is a violation credit report is when you have a duplicate account being reported by two different companies, or they're updating the payment history as a charge off, which they can't do. Okay. Different ones, and there's more that they know as far as that goes, or not removing accounts due to fraud is one of them. And one client they worked with got back like over $70,000 for these violations. It's huge. So with us, it's like, you pay.
Did you hear that, y'all?
Yeah,
they got some money back for the violation.
Yeah, so working with us, there's a potential that you can get money owed to you because of violations that you don't know about. Because these violation things affect your credit, and your credit affects you getting a job, getting promoted. It could also affect you getting life insurance. There are places that will decline you if your credit's bad because for life insurance, if your credit's not that great, which I was like, that's jacked up, but it happens. So so that's what we offer. We do an analysis too. So we're trying to make sure that we do the job thoroughly, give you a lot of value, and keep it moving and keep it in good standing. Because, like you said, Michelle, earlier, your credit changes. Your credit's like your health; it's fluid. It changes. It can go up and go down. You want to maintain it and just keep it going.
Yes, guys. A1 Solutions Group. We don't do a lot of selling on this show, on this series, on our platform. But what I can tell you is that we do bring to you people that actually know what they're doing, right? A big part of our mission is to help you put together your squad, right? Who are the people that are going to help you build generational wealth? Who are you going to be able to leverage? So, of course, that includes estate planning attorneys. That includes your realtor. That includes your mortgage broker. That also includes a financial planner, a CPA. That also includes someone who's going to help leverage that credit, help keep your credit healthy, like your body when you go to the doctor, right? And Matt, I'm giving you another title. You're going to be the doctor of credit.
No, doctor of credit.
The physician of credit.
I'll take it. I won't run with it, but you can call me and I'll be like, thanks. I'm just going to help you with the credit or whatever.
Yes. And what I can say is that, as I say this from a very loving place, as quirky as Matt can be, he really knows his stuff. I speak from experience of myself and my clients. He knows what he's doing. So, they have a flat fee and they give you lifetime support when it comes to credit. Key example, I had someone do some fraud, right? I got an alert because I'm on top of my credit, right? So my FICO, Credit Karma, all of them started beeping. Like, what's going on, right? And someone had applied for some loans with my information. So I called Matt. Oh my God, Matt, what am I gonna do? Matt said, calm down, put a lock on all of your reports. Call the police. The police officer came. The kids hung out with the officer, and we got the report and sent that over to Matt. Right. So again, the doctor of credit, kudos, love, absolutely love Matt. Matt, should people keep their credit reports locked? I've heard that a lot lately.
Say it again. It kind of broke up. Should they look at them a lot or lock them a lot?
Lock them.
If need be, in your case, for example, you've had fraud stuff, yes, lock it in that case. And then when you need to go apply, you can unlock it. As far as keeping it locked, that's dependent upon you and what you feel comfortable with. Okay. If you're like, whatever, it's fine, I can take care of it, and then you can do that. But if your concern is, I'm not trying to have someone get my information, lock it. But keep in mind that when you do, remember to unlock it when you go apply for something, because people forget and they'll be like, we can't pull it. And they're like, oh, because the other thing too is I don't think they've made it to where they should. You can go online and unlock it. I think Experian's like kind of dumb. They'll make you mail and stuff. You got to wait and all that stuff to like unlock it. And they don't make it very easy. But once it's done, it's done. But just remember that. And then again, if you're going to apply for something, unlock it. Give yourself the time to do so. So you're not in a rush.
Awesome. Okay, we haven't answered your last question. Jamila said no to co-signing.
Well, why?
Ooh, that's another one, guys. Why? Matt asked us a question for those that have been hanging out with us the whole time. Should you co-sign? Jamila says no. Matt, you're gonna have to give her a prize. She's been answering these questions.
I know. I will.
What's she gonna do, man?
Yeah, but why though? And Michelle, you said no too, right?
I did say no.
But why?
I feel because you're exposed, right? If you co-sign for someone and they do something, they don't make a payment or they pay late, then your credit is impacted by that.
Good reason. That's true. There is no hard or 1% yes or no to this. If you do, because I put that in there because it's a good question. It's like, it depends. Mm-hmm. Like if you trust them, I have a contract drawn up because, like you said, once you co-sign for that sucker, you're on it. And trying to get it done, get off is a pain in the butt because you're on that contract and they start missing payments, whatever. It's just your credit and can just ruin, relationships. So you can, but if you don't want to, remember, co-signing is optional. You're not forced to do it. So if you're like, I don't want to do it, then don't do it. That's why I put the question in there, because it's a question people need to know and some people need to consider. Instead of being like, sure, I'll co-sign for that guy. So you're like, hold on. I'm going to slow down.
Yeah. And, I kind of say the same thing about co-signing as I do about loaning money, right? Do not loan money if you don't have it to give away. Right. And I kind of feel the same way about co-signing. Like when you co-sign for someone, try to have the resources available to make the payment if they can't. That's really what a co-signer is, right? You actually are co-responsible for that debt. I know that I've had some opportunities to leverage my people's co-signing, like my grandparents in my early 20s. And they had to make a few payments to make sure everything was on the up and up.
Right. You're like, thanks, grandparents. I appreciate you because I was 20 and stupid.
Yes. And for those who know me, know that when I speak of my grandparents, I was in the same home with my grandparents. So that was like my mom and dad. It wasn't like I was like, hey, grandma in the rocker, let me take advantage of good credit. It wasn't that.
She's like rocking my forth, like, oh, Taki, why should I do this for you now?
Exactly.
Don't you?
Sorry, guys.
If I were your grandparents, I would be like, don't you owe me money? I think you do. Sipping a beer, convince me. Let's negotiate.
Exactly.
You want to be a real realtor? Sell me, negotiate with me, okay?
Oh my gosh. Matt, what are you doing for the holidays?
We'll be in town and we're gonna put up a tree this weekend. We're supposed to do last week. We're lazy because we got back from the beach. We went down to the Outer Banks for Thanksgiving. Nice. So we're just gonna exchange gifts and have a fat Christmas morning breakfast with mimosas and like bacon and egg sandwiches and cinnamon rolls. Just
okay. Here's the question. Okay, do you eat grits?
Do I eat what?
Grits.
Every now and then, yeah. I'm picky about it though.
Cheese or sugar?
Sugar. I don't want cheese in my grits.
What?
I don't want cheese in my eggs. I don't want cheese in my eggs. Why would you put cheese in grits? I don't understand. No.
Butter and savory or sweet. It's grits, man.
Butter and sugar in the grits? Yeah, I'll do that. But cheese, I'm like, nah. I don't understand when people put shrimp in that stuff. I'm like, nah.
What? See, let us know if you're watching now or the replay. Let us know how you feel about how Matt is going to.
I feel about your grits, sugar and butter. You want some cheese? I'm like, no. I will eat shredded cheese out the bag because I like doing it. But other than that, I don't know. It's a weird thing of mine, but it's good.
Awesome. Guys, if you're watching now or you're watching the replay, drop comments down below, drop questions down below. Matt and I, we're always available. Also, Matt, how do they find you? If someone wants to take advantage of this amazing half off special,
They can give us a call or send us a text. So I put it on the thing, or just tell you, and you'll just copy it and post it.
just let us know. Jamil will drop it in the comments.
Cool. So if you want to take advantage, you can give us a call at 703-232-1523. And then you call in, you choose option 2. Or you can go to our Facebook page, A1 Solutions Group Inc. INC. Comment on the page. I can respond back and get in touch with you that way as well.
Awesome, guys. Reach out to Matt. Again, you'll see him again. Matt is always here. Matt was like, "Hey, Michelle, when are we going live again?" I was like, "How about next week?" He was like, "Bet."
Yeah, exactly. Like, sweet. That's why I like it. Like, we would do it right now. Okay, fine.
Exactly. And here we are, people. So also go to our YouTube, luxuryandlegacy.com/watch. We have a couple of episodes on there where Matt is dropping knowledge. One of my favorites is where he talks about the history of credit. I've never heard it before, right? That should be your opener every time, Matt.
Every time the history of credit, because people don't know. He was like, it's old. I was gonna do it again. I was like, nah, change it a little bit this time. Ask some good questions, like deep ones make you think, like, should you co-sign? Like, should I? I don't know.
Should I co-sign? Is it a problem? The history of credit, guys. Go luxurylegacy.com/watch and look for Matt. Just search for Matt Dillingham in there, and you'll see. You'll be able to check out the history of credit. Thank you, Matt. Thank you so much for joining us.
Grab me on.
Yay! And have a Merry Christmas and try some like cheesy buttery grits, man.
I'll try cheesy buttery biscuits, but grits, nah, that's asking for too much right now. I can't do that.
Boo.
No, don't you boo me. I'm like, I don't, nah. Me and cheese got some issues we got to work out along the way. It may take the rest of my life, but I'm okay with that. I can be patient.
Awesome. Thank you again, Matt. Thanks, guys. Have a Merry Christmas, and we'll see you in these internet and generational wealth and building a legacy and credit matters streets.
Yep. Awesome.